Owning a home can be pricey, but guess what? It can also open the door to some fantastic tax deductions and credits that could save you a bundle on your income taxes. Intrigued? Thought so. Let's hop into these 7 tips to help you trim those high homeownership costs. First up, let's talk mortgage interest. The mortgage interest deduction is like the granddaddy of homeowner tax breaks, letting you deduct interest on up to $750,000 of mortgage debt, depending on your filing status. Just a heads up though, as you chip away at your mortgage, those interest charges will decrease. And remember, this deduction only applies to interest. Now, let's chat about discount points. When you snag a home loan, you might have the chance to pay discount points up front to score a lower interest rate, but there are some caveats. So do your homework. Maybe starting with the Experian blog. Moving on. If you itemize your deductions, you could snag up to a $10,000 deduction on your state and local property taxes, depending on the total of your state and local property tax, income tax, and sales tax combined. Fourth on our list, if you're a first-time or low-income homebuyer, don't miss out on the Mortgage Credit Certificate program. You do need a certificate from a state or local government agency, but it allows you to claim a tax credit that reduces your tax bill dollar for dollar up to $2,000. Next, if you're planning to buy, build, or make major improvements to your home, consider the interest on home equity loans and lines of credit. That interest is deductible for these specific purposes. Sixth, while most home improvements aren't tax deductible, there are a couple exceptions. Medically necessary improvements like accessible entrances or support bars are deductible if they exceed 7.5% of your income. Plus, energy-efficient upgrades can earn you the Energy Efficient Home Improvement Credit, offering you up to $3,200 in tax credits. For all the details, the IRS is your go-to source. And finally, if you're self-employed and have a dedicated home office as your principal place of business, there's a chance you can make it work even harder for you by deducting home office expenses. Just be sure to research what's deductible and what's not. And if you're still hungry for more info on tax breaks for homeowners, and let's be real, we've only scratched the surface here, head over to the Experian blog for a deep dive into all the potential savings waiting for you. Happy savings!